From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for August 22nd, 2017. Today we're going to be taking a look at the GBPUSD, Great British Pound versus US dollar, for today's trade analysis. Last week we began looking for opportunities to go long and buy this currency pair. In fact, going long a couple of times into the 1.2870-75 level a couple of times last week, showed some pretty decent profit, and then of course the market pulled back down and took us out at our break-even stop losses. A couple of things about this daily time frame. First off is the long-term trend, the black trend line that we've seen going all the way back to February and March of this year. We could see the rising trend in the middle of the trend where the blue circle is, bottomed out here and then made a new high within the trend. Well, over the past several weeks we've seen the market pull back along the blue trend line and touch back here into that black trend line. You can see 1, 2, 3, 4, 5 days sitting on top of that black trend line. Also, the 100 period simple moving average. Again, the blue circle, the red circle, bottom left-hand corner. We see a couple of times challenging that moving average, the 100 period simple moving average, and reversing and turning back higher again both times. And again, we've seen that market challenge, the 100 period moving average, the black trend line, all being challenged over the past 5 days or so for the pound dollar. Let's go ahead and zoom it in a little bit here on the daily. I've also taken Fibonacci from the low of the red trend line, bottom down here in the inside the blue circle, to the highest high on the chart. That put the 0.618 Fibonacci retracement level at 1.2848, the bottom of our yellow zone. So for the past 5 days, and you can clearly see that on the right hand side around the yellow shaded area, we have been looking for potential support and for the market to bounce back higher, targeting back towards the green shaded area. And yesterday we saw a pretty decent bounce off of there. We saw it go from the top of the yellow shaded area up about 45-50 pips. Now it's come right back down, and the market is now attempting to break that boundary, that barrier. Look at that 100 period moving average, yellow shaded area, black trend line, 618 fib, all as a brick wall in the market, a barrier in the market. Now we're attempting to break underneath it. Now I'm not going to say it's a breakout yet, because it's just attempting to. It's challenging it. It's testing the waters to see if the sellers are going to be strong enough to stay underneath this barrier. But so far it's just challenging it. So we're watching, we're being vigilant, watching for clues to the breakout, not just a simple push underneath it, but I'm typically looking for a singular candle body that opens and closes underneath here to give me confidence that it's a real breakout and it's going to continue to push lower. First off, we'll come in contact with 1.2800, of course, that even price handle. Not too hard to see that that would be our next barrier of support. 786, 886 fib sitting down here at the green, and then subsequently the blue shaded area, and of course all the way down at the bottom into the pink zone, which I haven't dragged over yet, but all the way down here at the bottom of this pink zone would be the last low that we see here on the left hand side of the chart. So still some ways to go if the market breaks out underneath here. We need to be vigilant and watch to see if this is a real breakout, because suddenly this could turn into a bullish candle, get back above 2870 and start turning back higher above the blue trend line. Let's take it down to the 4-hour time frame. Does it look any different down here? And I don't think it does. I think it's just a challenge, a test of the waters to see who's going to jump into this. And right now, of course, I'm not into it right now. The long or the buy trade that we had yesterday, I'm out of that now, of course, with break-even stop loss. Now waiting to see if this is going to be the real breakout. If it is, we'll look to go short underneath 1.2845, targeting the orange zone or lower, and be watchful. Your risk at that point is a push back above the yellow shade area. So your stop losses will be above the yellow zone if you decide to go short after the real deal breakout, not just a test of the breakout. And of course, if this suddenly reverses as the day goes on and gets back above the yellow zone, it may provide us a new opportunity to go long, especially on the break of the blue trend line, but a new opportunity to go long above the blue trend line, above the yellow zone, back above the 100 period moving average. Until that, we're going to start looking for opportunities potentially to go short for the pound dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.